Hey everyone, let's do another market review. And crazy fucking rally yesterday. Lots of stuff to talk about today, so let's do a recap first. FOMC, I think it's a nothing burger. I bought more TLT yesterday. This is temporary. Something will happen to make it go down, although short term it can go a bit higher here. Um, but I'm not worried at all about the TLT positioning. I think this is a very good thing to get into if you want to be hassle-free for the rest of the year. Yields at these levels, I think, are very good. You can go for tips as well to be inflation protected. But aside from this, like if you want to be hassle free, not worry about volatility and get like a 5% return no matter what, I think it's a very good spot to go long bonds and wait until year end. And then once we get a better entry into the market, if we get a pullback or when we get a pullback, I think it's fine to switch back into stocks. But if you want to be worry free for the rest of the year, it's a perfect opportunity to go big into TLT. And I don't mean options on TLT. I mean just getting bonds themselves or TLT or something like this, and just not worry about anything for the rest of the year. Now, yesterday, this is not accurate. It was 55. So let me switch on. I think this is showing for today. It's showing it for today because yeah, this one is the correct one. Because I was on the live one with today's data. So 55% UVol yesterday, in spite of the huge rally and the squeeze we saw in basically the whole AI complex. Uh, you can see that we are still negative in McClellan oscillator, so we're still in the red. This is still going down and so on. So it was a squeeze reversal, but it wasn't a good positive day. And I think today we're gonna get a fade, if not today, on Monday as well, and it will give us an entry into the semi rally that should happen in the first 2 weeks of August. So I don't think this will stick properly, but and I'm not going in if it doesn't give the pullback. So for example, let's take an SNDK, or actually let's take MU because I wanted to look at it here as well. So MU for the correlation uh, with the liquidity offset, the longer one. So I think this has gone to 900. What could happen, and what I would expect it to happen is we fade today. Monday, Tuesday, we go back to like 800, slightly below 800, and then we begin the rally once again, and then it does kind of this and still plays out. On the other end, we have the one with Amazon, which went up from earnings, so it's kind of breaking down here. But if you remember, for a couple of weeks back, Meta did the same kind of thing, and it was still fading later. So we had Meta when they announced they're going into an AWS type of business as well. And this did this multi-week rally, but eventually still faded, and now look where Meta is here. So don't read too much into what happened with Microsoft. Don't read too much into what happened with Amazon yesterday. And yesterday we had Microsoft going up 15%, but Meta was down to compensate for that. And today we have Amazon going up and Apple going down to compensate as well. So this being said, we look at liquidity. We looked at the breadth. I want to show you guys something today in that how similar we are to the 2021 cycle and how similar things look compared to that. And I put everything. I have two buckets here. One is the Archegos blow up portfolio because we had that. I don't know the guy's name, Leopold thing blow up right now, and people are very bullish on Twitter right now, and I think this is completely wrong. They're stupid to be bullish at this point. They, there might be some short-term gains to be had here, obviously, which I also think there are. But aside from that, when we get a blow up, is not a good thing for that portfolio of stocks. And I'll begin with Archegos. First of all, this is his portfolio was Discovery, Paramount. These are different right now, and this is the exact blowout day. So they topped out on the 23rd of March. Actually, this should be 23rd, and then the blow up started a couple of days later. I think the final blowout was on the 26th. The margin call itself was on the 26th. And what I want to show you guys is where the stocks are now. So that was the huge run, and I'll quote Mr. Huang in that he says something like some intern told him that like the things he bought are going up and it's a good thing, and he replied to, they are going up because I'm buying them, not the other way around, something like that. So me buying is what drives them to go up, not the other way around. So this pump here was the Archegos pump, and this is what happened to the stock after, and they never recovered, and I don't think they will ever get to these levels as well. So this is um, Paramount. At the time, the ticker was Para, but same kind of thing. It's nowhere near those highs, and it it may never go to that level as well. Then we have Gotu, also part of the Archegos portfolio. This had topped out earlier, was kind of in a bear market at that time, and then it faded completely. And once again, where is it now? Not anywhere close. Vips, the next one, same kind of look. This one was at the highs when it happened, and then it started fading. Once again, it's unlikely it will get to those levels ever again. This is Tencent. Tencent is plus Baidu were the bigger ones as companies themselves, but even Tencent didn't really get back to those levels quite yet. It tried to, but never recovered the same way again. Baidu, same kind of thing. So Baidu had topped out before that, uh, but still had got hit by the Archegos margin calls and had like 3 consecutive days of bleeding. And where's Baidu now? Again, nowhere near those levels again. Next, we have Shopify. Shopify was the least hit one afterwards, but a big part of this type of blowups is not necessarily that that we get short-term drops, is that the reason why they were going up is because they were being manipulated by these funds and they were being pumped on leverage with borrow money and so on and so on. So it's not a the problem is not that they dropped. The problem is that the liquidity that had been pushing them up over and over and over again with borrow money goes away. And if that goes away, even in the case of Shopify, which did go a bit higher later on, it still dropped massively afterwards because this is a divergent looking kind of rally, and we see it here like we never made new highs here. And eventually it does go down. Shopify also a good company as well, aside from the Archegos blow, but it still dropped massively afterwards, even though with a delay. And the last one was Farfetch. This is OTC stock as well. Again, being pumped like crazy and nowhere near that. I think they do these guys still exist? Looks like they went bankrupt or something. 0.0001 probably went bankrupt at some point. But the point is that I'm trying to make, and I will do it with the COVID darlings as well. And let's get to that as well. So first of all, we have Zoom. And what I want to show you for Zoom is, uh, I'll keep these lines, doesn't matter. But again, Zoom went as high as 587 dollars. Now it's 92. It did like a 90% drawdown. But again, this is just I'm making a show. It's not going to be perfectly accurate, but I take the the Zoom uh, chart and I put it over SNDK. And I don't want to like it's not going to be a perfect match, but when I'm not going to extend it to the left or to the right, but I'm just going to compress it to so that it matches the move better. So I didn't extend it, just the timing. I want to match the timing and I want to match everything else. So you see that it's pretty much the chart. We dropped here, we went here. We're going to have a big ass rebound soon, but it's for the same reason that I explained earlier, that the leverage money is going away. We get news every day about the Korean authorities restricting leverage rules and making it harder to get leverage for retail activity. That in itself means that the conditions that happened for the squeeze to push memory, AI, or whatever, to push it like crazy up with non-stop buying on borrow money are not coming back. That in itself means that these things are never going to get to these levels, or not never. I mean short term. So the conditions that made this thing go to like 2200 have disappeared. They're no longer here. We got some fund blowups. Again, those funds are not going to get the monies, same as Archego, from their creditors, from banks, from people giving the money to those funds. Because they blew up, they're not going to get the money to try again. Uh, Korean market makers are not allowing the same type of leverage to come back into the market. So this means that even if we get a push up, this is not going to happen again. And it's true now as it was in 2021. Like, imagine this type of rally that we get here. Let's measure this. So this was, first of all, this was like probably like 30%, 31%, this piece here. Then we have this piece here, which is 35%. And then we have this one here, 48%. So we had a 30% rally, a 35% rally, and a 48%, almost 50% rally before the final turn down. And now we are definitely in this part here, in which we will have some crazy volatility swings, but eventually we will roll over and just drop. Another one that was a darling was this one, was Tesla. And again, let's overlay it on SNDK. And I don't want to extend it. I want to keep the same uh, path. Now, I think this one looks better with like this. Sure. Let's just do this part. Yes, looks pretty good. So let's make it a bit smaller to tiny bit smaller like this. So you get the idea. Again, same type of pattern, same type of exponential move. Once we get that big correction that is basically 50% in our case, because I think this is exactly how much uh, like even more, 57%. That was the correction we got on SNDK. Once we get this big correction, the forces that have created the conditions to get this type of parabolic move have now gone away. And it is impossible to bring them back because they are unbringbackable. Let's do a couple more. So I had Neo as well, and SNDK, probably something like this. It's pretty well. Sideways here, another leg up, and then a big correction, and potentially another leg up, which we also saw on Tesla as well. Like when we look at Tesla, like this leg here is not completely a new one. And the final one was Moderna, which I think fits the best and is kind of the best example of like a shorter narrative, extremely shorter narrative, shorter meaning like a couple of months, and I think it fits very well to what we see it with SNDK. Again, I don't want to make uh, any type of adjustments to the length of the move, but basically kind of started around here, went a bit sideways, did a pullback here, did a pullback here, went up and up, correction, then it tries to go up again, and it fails. So my point is that the forces that have been enabling this type of move have all gone away. On the one side, we had retail and Korea, and has gone away. On the other side, we had various hedge funds that were super bullish AI, and those have gone away. And the path that will come to us afterwards is exactly this. Like maybe we get this type of leg up and make a new high, but it's going to be divergent and it won't be sustainable. But eventually we get this type of very large drop, and I think we are more likely that to be here, like when we got here, minus 30%. The minus 30% one shows that we are not at the top. When we get the minus 50 ones, is basically we are basically here. And again, we can use Tesla as confirmation. Um, how much did Tesla drop? I don't think it dropped that much. 30%, it went higher, and then when we got to like minus 40, minus 50, it was the top. How much was this one? 40%. Uh, what? Yeah, you get the idea. Once they start to fall, there is no recovering, although there will be various periods of a couple of weeks in length in which they can go up like 30 to 50% without any issues, and possibly even more if we get like the remnants of the squeezes coming our way. So in this case, let's look at a couple of things. We'll look at SNDK, MU, and DRAM. So it's kind of the same thing, or I could just do DRAM. So first of all, 50% retracement. This is going to be the major resistance that I'm going to be looking to not go short, but to get rejected. Because the first move is going to be very fake bullish looking, in that a lot of people will be convinced that we are in a new bull leg, and they will fall for it, and that will enable the next leg down to come to us very quickly. And because you see the numbers here, like 26% yesterday or the 4% up today, it will be extremely, extremely volatile. We're going to come into the 21 EMA. We're going to come into the 55 EMA, somewhere around here. So today could look like it goes higher, gets rejected, and closes red. And this is going to be a huge swing intraday. We're going to go up like 10, 15%. And let's just, we're going to, this will be like 15% if we go to the 55 EMA, and then we're going to drop 15%. That means we close red, we drop like another 14%. So those swings are possibly to be quite swingy, obviously. And like I said, for MU, I think we go back maybe to the beginning of this candle, and then we bounce, and then we get the rest of the rally here. I could obviously be wrong. This move can continue going, and it can be the one that goes directly to the like 1600 on SNDK. So this is what I think is plausible as well. It just goes directly here, but it's gonna get hard rejected when it gets here. And of course, it's gonna have a couple of red days in between here. So I don't expect it to continue relentlessly up, and we basically get to this level within a couple of days. No, it's gonna first get rejected, but maybe not as strongly. It's gonna have like a flat day or something like that. It will take a couple of weeks. I would expect like around 2 weeks for it to get to this level and get rejected. Maybe it gets here sooner than that, but it spends like 3, 4, 5 days here getting rejected or just consolidating before it does the next leg down. So this is kind of my thesis at the moment. I think the market has stopped. Um, what I would need to see to this prove this is I honestly don't know. Mm, First of all, we have to get like cues back above the ribbon, and should consolidate. Basically, if we get a breakout here, but even there is not. I honestly, there is nothing to convince me at the moment to be like full bullish. If we get this breakout here, maybe that's it. But I would like to see Brett improve. I would like to stop seeing this type of squeeze we saw here. This is not healthy behavior. It's not healthy when it goes down. It's not healthy when it goes up. Uh, this type of move is should not happen in a normal market. And I don't know. I have to think about it. I don't know. But for now, the main thesis is that we pull back a bit, then we begin the full rally. Basically, let's go back here and SNDK. So today fade, entry around, I don't know, 1200. Yeah, 1200, and then we continue the leg up and go here eventually next week. But yeah, that's my take. I was a bit rambly today, so I apologize for that if you didn't like it. But it is what it is. That's the setup. So for now, have a good one. Bye bye. Hope it helps.